Welcome back, guys, to the Investing for Beginners community. I'm your host, Johnny, and I got another solid video for you today. In today's video, we are going to talk about the 30-day update on the $5 challenge, where I invested $5 every single day into the Schwab US Dividend Equity ETF, or ticker symbol SCHD. Now, if you guys are not subscribed to this channel, make sure you do, so you don't miss out on future videos like this, and smash that like button so that way this video can get seen by more people just like you who want to know about this challenge. Now, let's go ahead and get into it right away, because if you didn't watch the previous video, I show you when I wanted to start, how I started, my thought process behind what I wanted to do with this challenge. So we're going to go over that real quick, and then I'm going to show you the numbers. You're going to be very surprised at how much we've been able to accumulate over 30 days in this single position. Now, we're going to show the chart right here. Now, as you can see, we bought this company back on January 1st or 2nd, okay? Now you can go back to the video and you want to see like the actual screenshots, but we really did purchase it. Here it is, market value $9.99, okay? I believe this is the second day of purchase. We set up with reoccurring investments, and our average cost, as you can see, is $76.20. Our shares is 0.13 of a share. Now, what's cool about Robinhood is that you can invest in fractional shares. So you don't need hundreds and hundreds of dollars to invest in your favorite company. And if you want to invest and use Robinhood, there's a link below. You will sign up and you'll get a free share. Now, as you can see here, our portfolio diversity is at 67%. So we started this challenge with a brand new portfolio at the beginning of January 1st. I want to showcase to you guys how simple it is that even investing $5 a day can really increase your portfolio over time. Now, we have a whole nother challenge for that, a whole nother video and topic for another day, but the point is that this is increasing in value. Now, if you take a look here, as you can see, it did go up in value to $49.66. Now, why would I continue to invest in this company if it's going down? Well, the point of all this is to average down your position. So as you can see here, my portfolio diversity is now at 11.92%. So the portfolio is increasing in value, but the market value of this company is also increasing. We went from $9.99 to now $49.66. Now, this is about midway, and I do have a midway update challenge video. If you want to see that, I'll put a card above up here so you guys don't miss out on that. So I talk a little bit more on the update video, more about dollar cost averaging down, and now we're going to start seeing the effects of it in this next slide. Now, as you can see, though, our total return is only about a negative 34 cents, which isn't bad considering this company was down almost 57 cents in one day. Now, also the fact that I don't own a full share, as you can see, my share price is 0.65, which is okay, right? So now moving on, we are going to go to the next slide, and this is where we are today. Now, what's cool about this, guys, is where we are today is at $110.75. Now, it might be a little different from screenshot because I'm looking at this on live, but our share price is the same, 1.440536. So now we have 1.5 shares of Schwab US Dividend Equity ETF with an average cost of $76.36, and we are now total return of 75 cents, okay, which is great. Our portfolio diversity is also about 9%. So as you remember before, we started with a huge portfolio diversity, and now it is coming to a bottom, okay? So if you're interested in how we're able to do this, and you also want to do it yourself, then never buy here, okay, guys? When people are paying crazy prices up here in this range and up here in this range, and it drops, the stock drops way down here, on average, you have to wait like 2 to 17 years to break back even from where you invested. That's like, hey, I'm going to give Apple $1,000 of my dollars. Now I'm down to only $200, and I have to wait all this time for it to go back up to get back my money. So they basically have to borrow my money for 10 years. You don't want to do that, especially with 10 grand, 100 grand, 300 grand. So definitely always have a stop loss. You want to make sure you have a stop loss and you never get stopped out. Or you make sure you stop out about, 5% of your total trade. You don't want to be holding the bag and running 10, 20% down. So I have a lot of videos here talking about stocks, great money making potentials. I have this week's 12/29. We are barely midweek, okay? It is Wednesday, but it's still a very good episode to watch. I show you my plays and some of the stuff that I'm talking about this week. Now, if you want, you can also sign up for our Facebook group of over 70,000 members, and on Instagram you can follow us. I give out active alerts just like this. Now, you could also sign up for our free weekly newsletter. You get a free ebook and a free budget template to help you get started so that you can actually get a little bit of money to start investing. You don't need a lot to invest, but if you don't have money saved, then you can't have money invested. All right, and with that weekly newsletter sign up, you'll get an invitation to our private group of over 70,000 members. It's free to join the conversation of like-minded individuals just like yourself. And finally, but not the least at all, Moo is our not necessarily sponsored today, but it is a link in the description below. You can start out with almost 8%, a little over 8% earned interest on your uninvested cash, and up to 15 free stocks. So definitely check that out, guys. Now, with that said, we're going to get into Schwab a little bit more, and we're going to show our actual screen here for all of you guys that are still watching. Y'all know I like sharing my screen and getting into the nitty gritty of things. So as you can see, Schwab US Dividend Equity is currently rising. It's at 13% in 3 months. Now that's fantastic. I didn't catch much of this right here, guys, okay? All month long, I've been averaging down, okay? Year to date, they're only up 0.46%. So I really haven't even shown you guys the true potential of how much this company can actually grow over time. Now we are up about 72 cents. Portfolio size is 9%. All you know that this is that public trading portfolio that I am showcasing to you guys. Now I do have this company actually closer to 100 shares in another account, along with some other great long-term accounts. Now, if you don't have multiple accounts, you should. That is why I promoted Moo just a moment ago. You should have at least 3 accounts. Long-term account that you never sell anything out of, that's your retirement account. Your second account should definitely be a swing trade type account, day trade. And then a third account, something super fast and efficient, seconds for you to do trades. We're talking like Moo, Webull. Those are great companies. Now, long term, look at this. They're up 57% in 5 years, okay? So if I was averaging down all this time, even down here in the pandemic and going all the way up, I would be at almost 60% return on $100. So I'd actually have $160. I'd almost double my money. Now, because we're averaging down and we're only putting $5 in a day, we're actually able to capture all of this. Okay, if I bought up here at 58 and then got scared and sold at 40, I would have lost my money. If I bought at 58 and it went to 80, you're not making as much as if you would have bought at 48, or if you would have averaged down and got your average down to about 40. Now, from 40 to 76, we're talking about doubling your money. $1,000 would have been $2,000, $10,000 would have been $20,000, and this is how people make a tremendous amount of money in the market, not only short term but long term. Now, what is the plan moving forward? We completed the 30-day challenge. So what is next? Well, I would say we're just going to continue to grow this account, and as we grow the account, we're just going to take advantage of those profits and those percentage gains. Now, for every day that this goes up, eventually it'll make me more money than I'm putting in. I'm putting $5 into this company. It'll eventually make me $5 a day, to where that $5 will make itself its own investment into the account, right? $5 made, $5 back in, and it'll actually create its own churning system to where eventually it'll be making tens, 20s, and hundreds of dollars. Okay, $10, $20, and then eventually 100, right? Okay, for everybody that doesn't get that. And you can eventually make hundreds of dollars and reinvest those hundreds of dollars back into the company. Now, Schwab also does pay a dividend, okay? And they are down slightly. Why? Okay, let's get into this again. Why are they down? Because most of their holdings is in Apple, Amgen, Home Depot, AbbVie, Merck. For some reason, Coca-Cola, Chevron, it's actually not showing Apple on here, which is very interesting to me. I could have swore it was. Maybe there was a recent change, not too sure. But yes, here we go. Final part of the video for all of you that are watching. Okay, your average price paid was $76.35. The current price is $76.88, so there is potential for it to go up more. Now, your first order place was on December 29th, so I did get a jump start on this, but only with $5, okay? And then I did the recurring investment starting January 1st. So, at the price of $76.01, it's now at $76.88. So it's come a long way since I first bought my first share. Now, you invested $5 last month and $100 or 1.31 shares since December 29th. So we've officially invested $100 because there was 20 trading days in January. And if I continue on, we'll have $1,245 by this coming December. So in 1 year, exactly 1 year, from December of the $5 I put in to December 29th, I'll have invested $1,245. Okay, but that does not mean it won't grow. That $1,245 could technically grow in, say, 1 year. It went from 12 to 1, so 13%. So say that $1,200 grows 13%, and you get an additional $150-ish on top of that. So now you have $1,300 on one company. That made you $150 or so for that year, and the potential to make you 60%. So now consider that $1,200 can now make you 60% in 5 years. In 5 years, you will actually have made closer to $650, $700 profit. So you'll have $1,200. You'll actually be more like at $2,000 on one company. Okay, and you're like, yeah, that's quite a bit. It is, but it does take some time. Okay, now if you like these videos and you want me to talk more about videos like this, then definitely smash that like button so I know that you want more like this. If I can get to, say, 50 likes by the end of today, the first 24 hours, I will give you guys 2 videos tomorrow. I'll do one like this on another company, and then I can do one on something else, like how to make more money faster, like options plays, day and swing trade plays. Well, I'm probably going to do a video on that anyway, so smash the like button to watch that video and subscribe so you don't miss out. But then if it gets to 50, I'll do another video just like this on another company. And heck, if I get to 100 likes, I'll even do another $5 challenge into any stock that you guys choose. The majority rules, whatever you pick, I'll put $5 in it every day for 30 days to show you the effects of it on that company and our portfolio. So I'm excited to be doing this. Definitely drop a comment or go over to Instagram and DM me, and we will see you guys in the next video. Click one of these and subscribe. We'll see you guys in the next one.